That Meebit is a little bit special for me. I minted four or five of them. My wife went into labor on the last day that you could mint. And so basically we went to the hospital. I had my laptop and my hardware wallet with me. She gave birth. She was asleep in the room next to my newborn son. And then I minted those Meebits hour to spare before I couldn't do it anymore. That's one of my forever ones I'll keep forever.
Thanks for listening to the SquiggleDAO podcast, which has been brought to you by Niftyfi. Niftyfi is the pioneer of the entire NFT lending market. Their platform has the deepest liquidity, which usually means you can get the best terms. They also have no auto-liquidation risk. As long as you repay the loan before maturity, you get your asset back. Get more flexibility on your finances, take advantage of any opportunities, and make your NFTs work for you. Niftyfi has done over $500 million in total loan volume since launching in 2020 and has had over 60,000 loans with zero security incidents. Head to niftyfi.com and try lending today. Welcome to the SquiggleDAO podcast. This is Nifty, and our guest today is Stephen Young. Stephen is the founder and CEO of the NFT lending protocol Niftyfi. He has a background as an artist, programmer, and financier. It's an honor to have him with us today. Stephen, welcome to the pod.
Hi, Nifty. Thanks for having me. It's an honor to be here. You guys are some proper OGs in this space, so it's good to be speaking.
So you live in South Africa and have experienced firsthand high inflation, or what is the same, quick currency devaluation. And in other interviews, you've shared that 15 years into your career, your salary in dollars was below what you earned in your very first job in the UK. How did that realization shape your outlook in finance and your career direction?
Yeah, I mean, it was quite an eye-opening moment. I was basically just doing like a basic calculation and realized this, and so really immediately started thinking, what's the point of saving for my retirement in a currency that is just being debased? I'm basically swimming an uphill, fighting an uphill battle here. And then so immediately started looking for some way to, I wanted to stay in the country. I loved, my family is here. I love the lifestyle, but I had to find a way to kind of get my finances out of the country. And, South Africa has also got a foreign exchange control. So, it's not as easy to move money in and out of the country. I mean, you can still do it, but it's more complicated. And then that essentially was how I'd heard about Bitcoin before, but, like this whole exercise of kind of thinking about this, how do you get capital, out of a system that's not working for you? And then basically found out about Bitcoin, watched all of Andreas Antonopoulos's videos, and kind of really opened up my eyes to, this new form of money and what money really is. And then so that year, I put my entire bonus. I was working for a financial institution at the time, put my entire bonus into crypto, and basically never looked back since.
And just to give an idea to me and the audience, what are the like barriers to get money out of the country, and also the inflation rates? How high are those?
So at the moment, the prime interest rate that you get from the bank is 11.5%. And then depending on your, like if you're a first-time homeowner who needs an 80% or 90% bond, you're probably paying prime plus 2%, maybe 3%. So, you're looking at 13.5%, 14%, which is very high. So, and then the foreign exchange controls, there's a limit of R1 million, I think, per year that you can take out of the country. And then you can apply for, and R1 million is, that's like $50,000 or something like that. It's not a huge amount of money. And maybe it's 10 million now. I can't exactly remember. But yeah, so there is foreign exchange control. So they're basically trying to control the currency. So it's possible. It's just more complicated. So what a lot of people do here is they've got you can invest in a local unit trust, which is a mutual fund essentially, but they like the local wrapper on foreign stocks. So you're essentially investing in like dollar stocks or US stocks, but holding it in a South African entity. So that's how a lot of people get around it.
And I'm interested in the high inflation aspect, as some countries or more countries in the future might experience high inflation as well, and some countries are already suffering it. How do you manage, or how do you see people managing differently household expenses, budgeting, and this type of stuff?
Yeah, so I think a lot of what it does is just like suppresses asset prices. So if you think about, if you're paying 15% on your home loan versus paying 5%, you can afford a 3 or 4 times more expensive house on the 5% interest repayments, because the affordability, you're paying the same per month, really. So then it's hard. So essentially what that means is it's cheap in a way to live here, but it's expensive for South Africans to actually afford those houses. And then it makes it difficult to move. So if you want to move from South Africa to the US or Europe, you can get a 5-bedroom house near the beach here for $300,000. Like you can't do that in the US, right? So so just kind of it's in a way you kind of the financial system keeps you even more trapped, because your asset base is worth less. If you want to move to somewhere else, it's very expensive, it's very difficult to do. So and then a lot of people in debt. It's very difficult to make ends meet in South Africa. It's got one of the highest unemployment rates in the world too. I think it's like 40%, which is really, really high. So I mean, it is just challenging in the country, So I mean, but that's also this. I think I just read a stat this morning: 10% of South Africans own crypto, and only 12% of South Africans pay tax. So that gives you a sense of how what percentage of the population that actually has money is putting it into crypto.
Wait a second. What does it mean that only 12% pay tax?
40% unemployment rate, and then you only start paying tax if you earn over a certain amount, and that's 12% of the population. And 90% of the tax in South Africa is paid by 3% of the population.
Crazy. And it's like Argentina, where real estate is priced in dollars as well, or rand?
No, so it's all local South African rand. Yeah.
Yeah, and those were going to be my questions. Like the interest in crypto, I was assuming that this was, and I was expecting a higher number, to be honest, than just 10%, because
I think it's
the need is
because
obvious.
I think there's a very big wealth disparity in South Africa. So it's only a small percentage of the population that actually have any disposable income to put into things like crypto. So of the people. So if like 12% of the country is paying tax, 10% of the country owns crypto, right? So that kind of gives you most people who are like have a decent, who earn enough to pay tax, probably own some crypto.
So, yeah, anyone who has savings, basically. And you mentioned that you put your bonus on Bitcoin, I'm understanding. How was that starting crypto?
Yes, I mean, so that was late 2016, so I think it was like $600 or something for a Bitcoin. So and it was just before the ICO kind of boom, and then started kind of buying stuff in the ICOs, and like got very early on, bought this thing, did a whole bunch of research on it, had this whole thesis on like why it was gonna do well. It then 10x'd, but like for none of the reasons that I thought, and then disappeared shortly afterwards. I managed to sell and lock in those profits, but very quickly realized that it was just pure luck. Everything was going up. It wasn't because I was being super clever about finding that. And so then I started moving like away from those things and just like started buying Ethereum, like kept buying crypto. So, dabbled a little bit, but was very sure to always like take profits and move it into basically Bitcoin and Ethereum at the time.
That was smart. And then NFTs as well? Or when did NFTs came to play?
So NFTs came about late 2019. So I then left the financial institution. It was an asset manager. I left there to co-found a cryptocurrency exchange. I'd left there, then took a little bit of time off, was spending some time in Thailand, was there for a couple of months. And then actually in the airport, on the way to the airport, on the way back, I messaged my friend Mads, who's one of the co-founders, and basically was telling him that I was, looking for whatever my next project was going to be. And he basically, I see he had an autoglyph and he wanted to buy more. I think he was preparing for the NBA Top Shots private beta. So he knew that was coming. He wanted to get some more capital available. His girlfriend wouldn't let him spend more real money, so he wanted to borrow some money from me. And just to give you context, I mean, I think autoglyphs at the time were 2 to 2.5 ether, right? So it wasn't a huge amount of money, and I think ether was $300 or something, right? So, but and then also at the same time, there was a few of the other guys in the kind of collectors, in the original CryptoKitties collectors, who were borrowing and lending from each other. There was like a spreadsheet, and they would kind of keep track of if this person doesn't send this to that person by this date, they get this NFT, and kind of keeping each other honest. So then basically we decided, well, why don't we build something that kind of takes that trust element out of the equation and kind of puts it in a smart contract, because that's the whole point of having blockchains. So that's what we did. So we kind of had the idea, like brainstormed a couple of back and forths on like what the basic structure would look like of the smart contract, and then basically got home back to South Africa, and lockdown happened. And so then basically I spent, and we had very severe lockdowns here. So I then spent the whole of lockdown essentially building the first version of NFTfi, launched it in May. Like April, May, and then pretty quickly, like it was kind of building up to the NBA Top Shots private beta, and so a lot of the guys that were kind of buying in there had kind of spent all of their money buying packs and wanted to buy some more. Had CryptoKitties, this kind of thing, started using the platform, and that's kind of really how everything kind of got started.
That's one of the OG moments now, the genesis of NFTfi. I've heard that story a couple of times, and it's crazy. And what were your thoughts back then on the potential of the NFT lending space?
Yeah, so I mean, even back then, for us, collectibles and art were just the first example of that was finding kind of product market fit, and I think largely just because blockchains were slow and expensive, so you kind of needed things that had small transaction count, relatively high value. So it was the thing that kind of fit at the time. But if you think about it, if you want to have a fully functioning economy, you need to have money and you need to have assets to buy with that money, right? Things to own. And for me, really, it's cryptocurrencies and fungible tokens are programmable money. NFTs are programmable ownership. And the first thing we found product market fit on was art and collectibles. But over time, more and more, it just makes sense that you need to be able to represent unique things on a blockchain. And then some of these things will have value, and where there's value, there's finance, right? So for us, it was always kind of a long-term view on in the real world, 35% of all value is non-fungible. In the crypto world, less than 1% of all value is non-fungible. If we believe that most value is going to flow over crypto rails over the long run, which I believe, it's kind of the same what we had with, again, it goes back to those Andreas Antonopoulos talks with, in the beginning, you were using a phone to kind of push digital data over an analog line. And now every time you make an analog phone call, it's actually being pushed over digital lines. And that's kind of what's going to happen over the long run with blockchains. It's just a better way to move value. And so most value is going to move over blockchain rails. And then it makes logical sense that the asset mix would kind of match the real world asset mix, right? So you'll have to grow that percentage of value in the crypto ecosystem that's non-fungible just to kind of match with the real world that we're slowly kind of taking more and more of the value from.
100%. My head is running in different directions because our topics I want to touch with you. And I want to make a brief comment that you've mentioned Andreas Antonopoulos, and I remember watching one of his talks. He's talking to a big, giant room, and then the camera opens, and there are like 3 people in the audience. And it's a really good Bitcoin talk. Probably you've seen it, but just a fun fact about him. When I started in the lending space, it was the Wild West. I remember not lending below 50% interest rate. Loan to values were all over the place. Defaults, it could be like a massive in the money default. And now for the top collections, interest rates are super competitive, probably even below the mortgage rate in South Africa. And the LTVs are really reasonable. Could you share how this evolution has looked from your perspective and the key shifts that have happened for this maturity of the NFT lending space?
Yeah. So I think, I mean, it was completely crazy. I was doing a lot of the early loans myself, and it was just like no idea what the actual risk here is with these things. It was so new, such a new asset class. So I think a few things have happened. I think, like you said, there are now top collections that everyone can agree on, right? So just the fact that there are now, nobody's going to argue that, it's Fidenzas, Autoglyphs, Squiggles, CryptoPunks, Xcopy, everyone knows that list now, right? When we first started, that wasn't the case. I mean, like I've got a founder CryptoKitty, so it's CryptoKitty number 72, that I think I gave it 28 Ether loan on and got a default on. And, like they're not worth nearly that now, but they were the OGs and they were the one that everybody thought was going to be huge, right? So I think it's
another example.
Hash masks, exactly. Yeah. So I think that there's now just some assets that have stood the test of time, that have kind of reached this escape velocity of probably staying relevant for a long period of time. So I think that's just like reduced the risk of you're blindly guessing which one of these things is actually going to be good collateral. So I think that's one thing. I think the other thing I think that's happened really is that for a while, there was a lot more liquidity than there was borrowers. So this liquidity the lenders were all competing for business from borrowers. And that like very aggressively drove LTVs up, durations longer, APRs down. I think maybe even too much. I think there's quite a few lenders that lost quite a lot of money in the recent downturn. And I actually I think there's maybe a little bit of a kind of reset needed in the markets. I think a lot of borrowers are still expecting the same terms that were kind of at the time. There's a lot of lenders that are not lending on the top tier assets anymore because the APRs are too low for the risk that they're taking. So I think at some time you probably see APRs and durations go down a little bit. APRs maybe go up slightly, but not a lot. I think it's just kind of like as the market kind of settles again. And then I just think it's much more, people are just more comfortable with the asset class, and it really is kind of the underlying assets have more provenance, so they are safer to lend on, so you get better rates.
It's interesting you were mentioning competition. I remember periods of time where I was completely stopping all lending because the LTVs APRs were not making any sense. So it was super competitive, but there was a couple points in time that it was like, whoever is doing this long term is going to lose money.
Or they've got a very long-term, they've got a long time horizon and a lot of capital, and they're willing to just hold those assets, right? So I do think that there's a big group of lenders that fit that profile at the moment. And because there's relatively more of them and relatively lower demand from the borrower side, they can meet all or a lot of the liquidity needs, which then kind of pushes the rates down. I think if you see a big influx of borrowers, you'll have to get more capital coming in. You'll have to have capital that aren't necessarily happy to hold the underlying asset. And then I think those lenders will probably charge higher LTVs. Higher APRs and slightly lower LTVs just because of the risk profile, and probably shorter duration.
It's interesting. You've mentioned a few times that the problem in the lending space to the growth problem is from borrowers, lack of borrowers, not lack of money and funds. For me, it was counterintuitive. Normally, it's lack of funds and lack of people willing to put money into risky assets. But here is lack of borrowers, lack of people. There is enough funds to cover all demand.
Yeah, I think that was true. I think it's evening out a little bit because I think a lot of lenders lost money, and I think a lot of people are just like exactly like you're saying. It's like they got burnt with the CryptoPunks prices going down, basically everything kind of going down like nonstop for a year. And so I think a lot of people are just stepping aside, just until things kind of calm down a little bit. So I do think the balance is kind of shifting a little bit again there. But as soon as you can get 25% again, I mean, that's very attractive yields, it's very soon. So basically that's what will happen is like, as the demand increases, APRs will go up because lenders like don't have to compete so much for business anymore. As APRs go up, more capital comes in, which then pushes the APRs back down again, right? So it's just normal market forces, really.
100%. And I was just looking at the data. We track the main collections weekly. And just to mention the drawdowns, we have Fidenzas and Glyphs 45% down in the last 3 years since we started. Basically, that's around 3 years. It's 32 months, the data set we have. Then we have Squiggles and Punks 65% down. And then the other collections, Ringers 80% down, Mibits 95, Bored Apes 90. So whoever was really difficult that someone is making money in the NFT or NFT lending space.
Yeah, exactly. And that all sounds very bleak, but, so if you take 48 months worth of history, then, then autoglyphs are up 10x, right? 20x more. 50x probably, right? So it's just just all depends on your time horizon. So that's also for me why it's like, yes, it's down, but 35 ether or 25 ether for a CryptoPunk, which is kind of I think what the floor is right now. That's nuts. When I started, I still remember when Bored Apes were 4 ether, and I was like, that is insane. Like, why would anybody pay for? And I think ether, it was like 500 at the time or something like that. Something, maybe a bit more. So I missed the whole Bored Ape run because I bought my first CryptoPunk for under an ether. So it was just like I just couldn't get my brain to like comprehend the prices. So for me, it's still up. It's still, it's a massive market cap for all of CryptoPunks, right? And at the time, it was worth basically nothing 5 years ago. So I think it's easy to feel bleak that if things are down 45% in 3 years, but if you go back 5 years, those things didn't exist or had almost zero value.
Great point. The traditional art market is worth around $1.4 trillion and has a lending penetration of around 15%. Please, if you have better data, let me know. I have $1.4 trillion, 15% lending penetration, $200 billion approx. And the NFT lending market is under 2% lending penetration or 100 million in outstanding debt. What do you think are the main barriers to increase lending penetration in the NFT lending space?
Yeah, so I think, part of it is just, I think a lot of who own all of the big, very valuable NFTs right now. Like a lot of it is people like Flamingo or like collector DAOs or big, So these people they just cash flush and they're buying right now, right? So I don't think. So they just so a large percentage of that total value is actually sitting with people who don't need to right now make that capital work for them. I think that changes over the long run. And then I think also, maybe also, so I don't think a lot of that art lending is happening as part of your, private banker helping you restructure your debt, right? So you're moving debt between, borrowing against your stocks and your paintings and your holiday homes and all these kind of things. And you kind of so there's somebody who's kind of managing it for you as part of a holistic portfolio. And I think, you probably need to have, in the long run, if you want to get to 15%, you need to have NFTs in those kinds of people's portfolios, and you need to kind of have this thinking about NFTs as an asset that is collateral worthy and it can be used as part of an overall kind of debt strategy. That should eventually trickle into the wealth managers kind of horizon and radar. I think that's a few years away, but that's kind of how for the asset class to get as big as traditional art and be trillions of dollars, and for you to have $200 billion worth of outstanding debt, you need to have professionals. A lot of those people don't manage their funds themselves, right? So I think there's like a way to go, but I think with clearer regulation, like DeFi kind of moving into DeFi will move into banks. We'll start seeing this kind of becoming much more of a common thing for financial advisors to be able to understand.
And something interesting I've heard you mention is that those private bankers that are managing those big portfolios, family offices, and their debt, they are probably looking for loans above $1 million, $2 million, $5 million. And that's interesting, where platforms like NFTfi comes into play for those 500K, 100K loans that are not going to be managed from a family office. So super interesting.
Yeah, exactly. So that it brings this capability to more people, and so I think that'll be part of and that is, I think, what could push you above 15%, right? So I think in the long run, you probably, because it's so much easier, you probably have a much higher penetration. But I do think you need both of those things, self-managed, and then this is part of a financial advisor's suite of tools that they can use.
And makes total sense, because probably it's better to get leverage on your home and buy stocks. With that, you're not going to get liquidated, margin called from the bank, or on your Picasso to buy stocks than get leverage on your stock portfolio and then get liquidated at the worst possible week going down in the market. So.
Exactly. Yeah, because they're illiquid assets, they don't get mark to market as often. So you can kind of ride out these dips a little bit more. And typically, yeah.
I've never thought about that way, but makes total sense. And something as well that I'm starting to see, but we haven't seen a lot of, is that every trad art sale we see in Christie's Sotheby's has a loan attached to it, or almost every sale. And this is still not happening for the NFT sales happening through those auction houses. And I think once we start including that, there will be more sales, higher prices, and more lending penetration.
Yeah, exactly. I mean, and Sotheby's and Christie's they're very into NFTs, and they're, we speak to them on a kind of regular basis. So they're definitely thinking about this. I think it's just, for them, again, for it to be worth their while in terms of like deal sizes, $1 million really is kind of where they start getting interested. So I think at the moment it's just, I think the curators are interested there, but it's just not big enough for the finance guys to kind of do the due diligence to kind of get comfortable yet, right? But that'll change over time.
Are them doing the loans as well? Are them the counterparty?
Sorry,
for the trad art pieces, they are doing the loans as well, or just
there is a finance arm of both Christie's and Sotheby's, so they do a lot of these kind of things. Yes.
Talking a little bit about your whole overview that you have from the space, seeing borrowers, lenders, can you share some interesting loans or deals that you've seen happen?
Yeah, so I think it's like just a little bit more on what I've been finding very interesting is just like these X-copy sales, just one after the other, kind of at record prices, like almost instantly, so like he really feels like he's kind of reached an escape velocity that I don't think there's anybody else really has done, which I found quite interesting, because on the lending markets, like the generative art tends to do slightly better, just because I think there's a larger collector base. But yeah, so I think Xcopy really is kind of that one of one artist that has really kind of taken off, which I thought was interesting. I thought the full set autoglyph sale a few months ago, that was very interesting. $15 million. That's a hefty price tag. I don't know if you saw how there was a auction of the set of 7 autoglyphs. I didn't see how that closed. Do you keep track of that?
No, I don't remember that one. But do these big sets, for example, the autoglyph set, do they come as well to you asking for a potential loan?
Not really, no. So we've been speaking to a few people, but again, like a lot of those guys just, they got them for nothing, and they had 40, and now, they just, they don't need the loans.
It's interesting that the crypto people have a problem of having too much money, some of them. So interesting.
Yeah, no, but I think it's also the part of how it originally started, right? So, like those early guys like Nate and Jimmy and all of those guys, they just bought 20% of the supply of every single thing that launched because they just couldn't help themselves, right? So then there was this very kind of, because it was like a very small core group of people who were just obsessed with it, they just ended up with such a large portion of the supply for a lot of those early projects, and like a lot of those early projects are the ones that ended up kind of sticking it out. So I think a lot of them just kind of accidentally got extremely rich. So yeah, so that's interesting. But again, over time, that'll they kind of trickle out, and like anybody who's got 20 autoglyphs is thinking about selling some of them, and like over time that kind of spreads into more people's hands. So I think, yeah, so I thought those were very interesting. The other things that I'm just shopping for stuff that I want. So the Harvest and Keitel Golitz stuff, like I've always wanted, and I missed it in the beginning, and then it got too expensive, and now it's kind of starting to become affordable again. So yeah, so I think it's more that I'm looking at some of the cheaper assets for things that I want to kind of have up in my office or something like that. Yeah.
Everyone knows that some borrowers are just levering up, but can you talk about what some smart borrowers are doing with the funds?
Yeah, so I think a lot of people are just levering up, and it kind of makes sense to start doing that now. I think we're kind of right at the turning point in the cycle. So I think even as long as you can manage your debt to equity ratio kind of well there and deleverage as the market starts running, I think levering up is not, if you do it properly, it's not a dumb move right now. It's just, yeah, the big thing is to take off that risk as the market goes up. Like people tend to then just pile on, and these things worth more. Just take out more debt. I'll take out more debt. So that's when you get in trouble. The other thing that we've seen is, the use cases for me that are the most interesting are the ones that are kind of like real life. So we had one borrower that needed some capital for their business. They were getting a business loan, but it was going to take 4 weeks to do. So they took out a loan on a bunch of doodles to basically as a bridging loan until they got the finance for the business loan. So it's like those kinds of things I find interesting, because that becomes, it starts fitting into kind of a real world use case. The other thing that I find quite interesting is, a lot of these watch loans that you're seeing, a lot of them are actually watch dealers who are basically financing a transaction. So it's kind of as part of their business loop, they tokenize the watch, put it in the vault, get a loan on that allows them to kind of finance the second half of the deal. So that I find quite interesting, where it's like it is part of a existing transaction that they would normally have done off chain, but now that it's on chain, they get access to large pools of capital. And I think really those kinds of things are kind of what's needed to really kind of push NFTs into a new growth cycle. It needs to be part of real business processes in like a useful way.
Super interesting. Adding a couple more, we saw one Squiggle owner taking a loan on 5 Squiggles to put a down payment on a home, which was
Very cool.
Pretty cool use of funds. And then I think I've heard you sharing borrowing in dollars backed by your NFT to long ETH, and the other way around when we are at the top, or people think we are at the top, to short ETH. So that's super interesting as well.
If you can get, so on Blend at the moment, you're getting like 70%, 80% LTV sometime. So like that, you can kind of think of that. Maybe now is not the time because things don't go up, but you can think of, if you're doing an 80 or 90% LTV loan on something, I mean, it's basically speculating on margin, right? So like you're longing the asset on margin, and you've got like a cap of losing 10%, right? So I mean, that's also a very valid use case, right? I mean, it makes sense if you can cap your downside to 20% but be exposed to the full upside. I mean, it's not a bad trade to do that.
Yeah, 100%. I think if my data is correct, Niftyfi still has the biggest NFT loan with an autoglyph type 10 for $1.42 million.
Yeah.
It was a record loan. Can you share a little bit of that deal?
Yeah, so I mean, we weren't really all that involved in kind of manufacturing that, right? That was just like an organic deal between the borrower and the lender, and they settled on NFTfi, right? So
that's super cool.
So yeah, but I mean, like that was very interesting, and that was kind of like, it is I mean, that's serious money on a single asset, right? So that was pretty exciting. I mean, it will be good one day to see a full set autoglyph loan. I think that'll be cool. That's a good goal to have.
Okay, we have some minutes left, but it's my favorite section, so it's getting longer and longer, and it's the rapid fire. Always like to say questions rapid fire, answers don't need to be. Okay. First question is, have you been able to replace your mortgage with a loan on your autoglyph?
not quite yet, but yeah, I think maybe next cycle it'll happen.
That's pretty cool. I wanted to mention that what we haven't seen yet is the mortgage type loan on NFT, and I think that's an interesting use case where you can purchase an expensive piece like a gold grail, personal grail, and then pay in installments until you complete your autoglyph bank. And I think that's one I would love to see.
Yeah, I think that one is interesting. I think the only thing with that is on an L1, maybe gas is not so bad right now, but it starts becoming, like you have this trade-off. I think definitely on L2s that becomes very kind of appealing, or you need to have a very big loan, right? On an L1 to pay for the gas.
Can you do something like repaying on L2 so it's cheaper gas, but keeping the asset on L1?
Yeah, you can start doing those things. It just, there's just I think that way around probably works better. It's just, like, would you bridge an autoglyph full set, like with a bridge?
No. I think the asset always stays L1, but the platform, the smart contract, allows a borrower to repay via L2. So
yeah,
I think that's.
So I think that works. And the interoperability is getting much better. Like the time is going down a lot there. So yeah, I think that is definitely a reasonable use case there. There's something that we're kind of looking into. I think it is a logical kind of next step. I just don't know like quite if it's ready yet, but maybe like buy now pay later needs multiple installment payments for it to actually take off, right? So
I think it makes sense for some of those big pieces.
Yeah,
and also sometimes gas is as big as the interest portion of the loan repayment, so makes sense.
Yeah.
You've lived through several crypto cycles in 2016. What are some of your lessons learned?
It's just, like, lessons that I keep learning over and over, maybe. It's so,
We all do.
so one of the things, it was like always this part in the cycle like gets super depressing. I was like a month ago, I was like, what's happening with crypto right now? And then I went back and I looked at like, well, what was the Ethereum price on that day 4 years ago? And it was like $400 or something like that, right? So this is like, okay, well, we're just exactly where we were. We always get more depressed than we think. The bear markets always feel like they like are never going to end, and then so much happens in a bull that like that 9 months to a year feels like 2 years, and so like you always think it's going to go on longer than it actually does, when you're kind of like in it. So those are two things that I kind of have learned over and over again. And the other big thing for me, which is just like what's worked really well for me and is kind of part of my personality too, is I just have like a longer time horizon. So I haven't really sold any of that crypto that I bought in 2016, and I didn't trade too much, and I just kind of like, bought stuff, didn't do a lot, held on, was patient. And I think it's like that's a bit of a superpower in a way in the crypto space. Like it's much less stressful. You don't have to like freak out the whole time, and you're much less likely to lose everything that you kind of put into it. So those for me is like stick to your personality type. For me, that's long term. And then, bear markets always feel worse than they are. Bull markets never last as long as you think that they will.
So true, really good ones. I love them, and especially with ETH NFTs that feeling like they are lagging. Sometimes it's good to remember that it's always similar.
Ethereum has outperformed Sol and Bitcoin over the last 7 days. So there's hope.
Okay. Okay. We celebrate what we can, no?
Yep.
Where do you think we are on the cycle?
I think we've just started the proper kind of end of the kind of bull run. Global liquidity is turning. I think the regulatory clarity that should be coming out of the US is going to be very big for the space. It would be interesting to see if like DeFi and utility tokens make a resurgence. Because if it all of a sudden actually becomes legal to give utility to your token, does that pull some of the wind out of the meme coin sales? Or does that happen only in the next cycle? I'm not sure. So that would be interesting to see. But yeah, my view is that we're in for very bullish time for the kind of next 12, or make it 9 to 12 months, something like that.
And what are some top signals in your opinion?
The most important one is just the rate of change of global liquidity. So basically, as global liquidity starts slowing down, crypto starts topping. So that for me, it's happened basically every cycle. Crypto is macro. As there's more liquidity, crypto is really good for risk assets. It's very good for crypto. And then the regulatory clarity that we're getting now, I think, is kind of an extra tailwind.
And you've mentioned that you haven't sold anything. Do you have a price to sell this cycle?
I mean, I've sold a little bit, and like as I sold some CryptoPunks, kind of, I think I sold them at 88 ether floor, something like that. So I timed that well. But I'll probably ladder out a little bit and more kind of looking at the kind of liquidity indicators. So but probably start kind of taking some profits as we start reaching all-time highs for Ethereum. Same, I've got some Solana as well, so I'll probably start like laddering out a little bit, taking profits over the course of probably from February-ish onwards for the rest of the year. So slowly kind of take a little bit of profit.
Makes sense. I like similar approach. I like to get into the market DCAing and do the reverse DCA to get out, because I'm aware that I'm not gonna pick the bottom and the top. So I just try to put during the bear.
And who knows, especially kind of with how the world is right now, there's so much like political and geopolitical like uncertainty, you know, you just like, you never know, you know, something could happen at any point in time.
You have really cool pieces in your collection. You have a hoodie Mibit that you minted. You have Memories of Chilling, an autoglyph, a Slinky 7571. What is your favorite NFT?
That Meebit is a little bit special for me. So that one I minted as part of because I had some punks. So I minted four or five of them. But my wife went into labor on the last day that you could mint. And so basically we went to the hospital. I had my laptop and my hardware wallet with me. She gave birth. We went back to the room. She was asleep in the room next to my newborn son. And then I minted those Meebits then kind of like with an hour to spare before, I couldn't do it anymore. So yeah, so that's like, it's like that's one of my forever ones I'll keep forever, especially that hoodie one. It's also got the Lava Lab sneakers, and it's like a really nice looking one. So I'll always keep that one. I really love the Memories actually, I think is like really pretty. So, that's something I have up in my house. And then I kind of have a soft spot for like that founder Crypto Kitty. It's like the 72nd ERC 721 minted, right? Like that's pretty cool. So I mean, it cost me a lot.
An OG piece.
Yeah. So I don't know if it'll ever be worth anything again, but it's like nice owning a little bit of history.
Any grail that got away and the story behind it?
Basically, like all of Ketel Golad's stuff. I just didn't have, I just didn't have any capital at the time when kind of he was popping off. I always loved his stuff. It just got too expensive too quickly for me to justify the price. But yeah, I'm always watching it and looking for ones that are becoming more affordable. Then yeah, for Denzas too, like I almost bought one for like, very early on. I love the look of them. I think they're one of the like aesthetically most appealing the generative art pieces for me. So yeah, those ones. And then yeah, Pump, the Eternal Pump. I also was this close to buying one, and very early on, but they got away. But I've also got a bunch of day one art blocks that I am happy with. I've got a couple of Genesis construction tokens. So yeah,
Fidensis it's beautiful. I love the founder of Shopify. He has one on his living room, and it's really a piece of art that looks amazing.
Yeah, no, they're very beautiful. Yeah, those are definitely, and and like the Ketel stuff, like especially, I don't know if you've seen some of his. He did like an edition of 10 of so it's not a art blocks project. It's like a smaller edition of 10. Beautiful stuff there, but they're also just very expensive. Oh, and the other thing that I like, it's not that I missed because they were already very expensive, but Def Beef, that like I would have loved to have some Def Beef. But yeah, I missed that one also. Can't justify 50. I think I've got 50 Ether floor still on those ones, right?
You've seen the NFT market from the very beginning. How do you see the NFT space right now?
Yeah, so I think we're kind of in the middle of like a transition phase where we're kind of starting to see new use cases, but they haven't really fully taken off yet. So very interested to see things like tokenized real world collectibles, I'm really interested in seeing things that produce yield being represented as NFTs. I think that will be a big game changer. So once you kind of have a real like cash flows that are coming from an NFT, I think that kind of changes a lot what you can do finance wise with those assets. So we've seen a few things like that. We've seen like payment streams represented as NFTs, Ethereum staking nodes represented as NFTs. So a lot of kind of interesting things kind of percolating, but nothing has kind of had their, top shots moments or something like that yet in those asset classes. So I think that there's lots of those kind of things cooking behind the scenes, and I'm excited to see kind of something pop off. And then for PFP and art, so like I said earlier, I think the real kind of top tier assets are pretty clear. I think that there are some mid-tier, more affordable artists that are actually pretty good deals right now. So like at the Harvest, like Ketel Golid stuff, there's a few things like that I think will probably come back. And so I think there's like a second tier crop that I think is more affordable for normal people. And then on the PFP side, yeah, I think that's interesting to see what's going to happen there. I think that there's a few of those PFP brands that are probably big enough to become consumer brands, but it'll take a while. So I think some of them stick around. So I think that'll be interesting. And then the other area that I think it would be interesting is, because like a lot of the meme coin things has like some elements that overlap with NFTs, but it's like more financial. And I'm wondering like I kind of have a feeling that there's something where it's both a meme coin and an NFT, like figuring out the secret sauce there. Like what is the CryptoPunks of meme coin NFTs, right? Like I don't think we've really seen that yet, but I think that could be quite an interesting combination. Maybe ApeCoin is kind of starting to kind of go there, right? So you got the ApeCoin and you've got the all of the assets that live in that ecosystem. So
and some meme coins have done the other way, like from meme coin to launch the NFT collection.
Exactly. Yeah, and so maybe we're kind of in that moment that we were in basically this time in 2020, where a lot of projects were being launched, hash masks, Bored Apes, all of these things were kind of being launched, and nobody really knew which one was going to be the big one. And maybe we're kind of in that phase of the meme coin NFT kind of emergence, but yeah, I mean, it's interesting. I just think we're going to see more and more different kinds of asset classes, more and more verticals, and we'll have like a lot of infrastructure being built that serves all of them. And then there's going to be a lot of more like verticalized, end-to-end experience, like Fabrica, Fabrica Land, the tokenized real estate. You can tokenize the land, get a loan, repay the loan, all on their platform. They just integrate with the lending protocols on the back in the back end. And I think you'll see more and more of that as you start kind of, especially going into real world collectibles and those kinds of things. You have much more customized experiences.
You've talked about Fabrica, tokenized real estate, wines, recently luxury watches. You announced. What's next for NFTfi?
Yeah, so I think working more with integration partners. So for, like I said, like I think over the long run, the growth of this industry is going to lead to much more verticalization, because the watch market is different from the property market, is different from the art market, is different from the collectibles market. You need different things, and it's like completely different players. And what matters in the watch market, time to deal is super important. In the art market, it's not, right? So there's different. And in the watch market, they probably have more pricing power because they've got the captive, they've got the both sides of the thing. Whereas in these big global marketplaces, there's less pricing power. So we're really kind of working with partners to kind of build, more and more kind of even just smart contract level, even if it doesn't end up on our DApp, but like customized solutions for different verticals. So that is very interesting for us over the long run.
I have to ask, are you considering sneakers as well, or?
Yeah, we're happy with like doing any of those things, right? Like, I mean, sneakers are huge. It's just,
Maybe too
it's
small,
just finding the lenders, right? Like that's and that's the thing with each one of these new verticals. You kind of have this kickstarting the market from scratch again. And I think watches. I think a lot of NFT collectors are probably watch collectors, and maybe sneakers also kind of there's an overlap. So at least you have like a few of the lenders that are already operating in the space who know something about watches or know something about sneakers. I think is less so with things like real estate or diamonds or gold, or like whatever else you want to do. So I think these cultural collectibles are probably going to be the easiest to kickstart a market on.
Watches and NFTs overlap a lot. It's really important, the rarity, the year, the condition, the lots of aspects, kind of metadata for an NFT. And I think they are overlapping, and those ecosystems will probably meet.
Their price action overlaps too. I don't know if you saw that. Like if you overlay the Rolex floor price and the Bored Ape floor price, they basically peaked at the same time, dropped at the same time. It's all liquidity.
Super interesting. Stephen, anything else you'd like to share?
No, that's it. I just wanted to say thanks, and thanks for everything you guys do in the ecosystem. You guys are one of the kind of steady, good players who kind of have long-term best interest of the entire ecosystem at heart. So thanks for everything that you guys do.
Thank you so much. And thank you for joining us. Really appreciate your stories, your insights. And I know our community will get a ton out of them. And we really appreciate Niftyfi sponsoring this podcast. So thank you for that.
My pleasure.
You can follow Stephen on Twitter at Stephen_yo, STEPHEN_YO, and Niftyfi at Niftyfi, NFTfi. Stephen, thank you so much.
Thanks, Nifty.
Thank you for tuning in. If you found this episode valuable, don't forget to follow SquiggleDAO, like, and share this content. We'd love to have you join the conversation in our open Discord section, so feel free to hop in and connect with us. Your feedback is crucial, so drop a comment or send us a DM. We are always eager to improve and tailor our content to better serve you. The information provided in this podcast is for general informational purposes only and should not be considered as professional or financial advice. The content is based on personal experiences, opinions, and research, and its accuracy, completeness, and timeliness cannot be guaranteed. Always conduct your own research and seek advice from professionals before making financial decisions.